Hello traders, and welcome to my video on the mean reversion indicator, which is going to show you how you can catch moves such as this one for almost 300 pips. And this is the Euro Canadian dollar UCAD 1 hour chart. This is the MT4 platform. I've downloaded the mean reversion indicator, as you can see here, attached to the chart. So you can use this indicator on any trading instrument or any chart time frame. I prefer the higher chart time frames as they tend to give more reliable signals. Okay, so basically this is the way that I interpret this indicator. You know, traders may use it in a different way. Basically, the whole purpose of the indicator is that price will eventually make its way back to the middle. Okay, so we can use it for trend trading by just waiting for a pullback to the middle when there is a trend. So first thing we need to do is identify the trend. So we have our uptrend here. A simple trend line will tell you that, as well as the indicator. You can see this curve down here and the indicator moving to the upside. Okay, so we see that price has gone from one side of the indicator to the other, which also indicates the uptrend, and we're going to wait for a pullback to the middle line, which happens here. So price goes to one side, pulls back here, and this is when we're going to start thinking about getting in on this long trend, this buy trend, bullish market, however you want to call it. And we're going to use this indicator as a guide. So we have the pullback to the middle line. Now we can use resistance is one option we can use. So we can wait for price to pull back, and then as it continues upwards, we can trade on the breakout of this resistance level here, place our stop loss below there, which is around 25 pips. And as you can see, we would have caught this move from a fairly early opportunity and had at the time now around 250 pips of profit potential. Could have trailed our stop loss on the way up just by placing it below the lows of price. You see, have a bull rally here, place it below the recent low, pull back, bull rally, place it below the recent low, pull back, bull rally, place it below the recent low, pull back, bull rally, place it below the recent low. As you can see, we would have been taken out in this instance. You could have looked to re-enter, although we may be thinking that we're going to be buying high if we consider re-entering here. It just depends on your long-term trading strategy. So if we go back to the initial entry, the mean reversion indicator was showing us the direction of the market, as was the trend line that we drew. We have the pullback towards the middle. You can use the lines for your stop loss as well. You see this line, we could have trailed the stop loss up there, may have been taken out here. We could have closed part of the position on the way up, whilst allowing the remainder to run. So you could have also entered when we have this pullback to the center line. This could be another point of entry. Okay, although I probably would have been looking at this break. Can be perfect all the time, and I may have been looking at this breakout down here and say, okay, gonna want to see how this price reacts first. You can see there's a shooting star candlestick pattern there. Is that a falling star? Either way, the market is starting to fall, but then once we had this level of support here, let me just steal this one, this level of support forming here, we can see that previously this level's held up quite well. Okay, it's resistance and support, and the price has rejected this level quite a few times, so we may be confident to consider an entry on this breakout here if we just mark the lower highs there. There is the potential to enter on this breakout, okay, further back on the mean revision indicator, and just to get in slightly, well, I say slightly earlier, we would have been in almost 50 pips, which is really good, and we could have used the support as the stop loss level there around 20 pips. and as I said, trail the price on the way up. Okay, always keep an eye out for your candlestick patterns just to see if there's anything suggesting or confirming the trade. We do have as well, let me just mark this for you. It's got this flag chart pattern here. Okay, bullish flag, uptrend, pullback, entry on the breakout. Many ways you can trade this particular setup here, if not the support, the resistance level there. Some may just be trading the pullback to that mean revision line there. So basically wait for the trend to establish as it did from here to here, and then have a pullback either to the central line, this line, or the third line. You could argue that if price comes all the way back to here, it's actually a trend reversal. Okay, so we wouldn't be looking to go long then. We'd be more of in a downtrend. So yeah, that's how to use the mean reversion. One of the ways you can use the mean reversion indicator for catching moves into long-term trends. Okay, now I want to show you how you can use the mean reversion indicator in a downtrend. Okay, we just looked at an uptrend. As you can see, there's plenty of profits to bank there. For this particular downtrend, we could have called somewhere around 350 odd pips by using this indicator along with our own price action analysis. So what we do again is we mark our support and resistance levels. Here we have a strong resistance level that's also formed a triple top candlestick pattern or an M pattern, which suggests that this is strong resistance and we can expect a breakout perhaps of this neckline here to the downside. As you can see from that candle there, was a significant breakout of the support level within this area of resistance. Other traders may draw the line like that, forming a wedge pattern, and again the breakout is still in the same area. Okay, so the mean reversion indicator, how this comes into play is once we've marked our area of resistance and we've seen that price is starting to make lower highs, we know that it's falling. The mean reversion indicator is turned to the downside, so we're expecting the bearish market to continue. Okay, we could have traded on this breakout here. However, if using the mean reversion indicator, as I said, what we tend to wait for is a pullback. So once price is broken down to say this level, you can enter on the pullback either to the central line or the second and third lines here. Okay, so entry point possibly here short, here short, here short. What I would personally have done is I would have just marked my support level there and waited for price to, as we see it was tested, support, and then it was retested here, and then the breakout is quite significant to the downside there, which suggests there's a strong level of support. So I might have been basing my trade off of that, also with the nice confirmation from the mean reversion line that we're in a nice pullback but still bearish. Okay, as I said before, if price was to creep over this side, we'd probably forget about going short and start considering that the trend is turning direction. It's worth mentioning, always keep an eye on your candlestick patterns. We do have a 3 inside down there suggesting bearish market. That's a bull candle followed by a bearish candle, at least 50% of the body, and then another bearish candle which breaks below the support. I do have a video on that candlestick pattern as well as many others you can watch. It's just good to know as many different forms of market analysis as possible to help confirm entries and to avoid taking bad trades. I mean, not like you'd be looking to sell down here, but certain candlestick patterns and indicators would prevent you from doing so anyway. Okay, so if price had come down here, just going back to that initial excuse me, going back to this, if you weren't using the mean reversion indicator, chances are you would have taken this breakout trade here. Otherwise, you could have still gotten in here, Going back to candlestick patterns, looking at this breakout, you do have a 3 inside down there. So that would have been a sign to perhaps look to sell as well. Had you got in there, you would have been up 350 odd pips. If you waited for the pullback, you would have been up still 200 and odd pips, which is not bad. The good thing about waiting for the pullback is that there will be instances where you have a fake out here and price will continue back up and you'll be looking at a stop loss or perhaps a market ranging market, which is why waiting for a pullback can be preferred by some traders. Everyone's different, obviously. Again, we had a pullback to the central line here, made it as far as a second, then a breakdown, but you could have traded either of these pullbacks. Again, you still would have been in the trade at this downtrend, relatively decent price point, and with this big bar banking some nice profits. Again, pullback to this area, to the central of the mean reversion indicator, the second and third line. In this instance, you may just want to be thinking about holding fire just because we can see the market making higher lows, quite a market consolidation going on here, some indecision in the market. Although in saying that, you can see the mean reversion line did carry on downwards along with the trend line, but yeah, there still would have been opportunities to get in on this trend if you were desperate, although some may argue now we're looking at a bit of a ranging market. You can see it's sort of trapped between this range by this spike of a candle here, and the mean reversion indicator as well has gone flat, although it is starting to curve to the downside, probably because of this candle, although price is making a move back up. If we go back to the entry here, again, trailing stop. So as price falls down, pull back and falls down again, you want to move your stop loss, I would, above the highs and just lock in the trade. Could arguably still be in this position, or if not, we still would have banked a good amount of profit. You can close part of the position on the way down as well. So as you can see, the mean reversion indicator is very easy to use. It looks pretty on the charts. However, it can possibly lead to delayed entries, and you can achieve similar results by using trend lines, in my opinion. Fibonacci, the Fibonacci tool as well, will show you important levels of retracement. Well, hopefully you found something useful in this video. Please like and subscribe. Thank you for watching, and catch you on the next one.